Hi, this is Oli Hille on the 18th of July 2013 with a very quick video on Aussie USD. Now, Aussie USD, as you can see from this chart, has been a fantastic trending trade, certainly since April, so that's over 3 months. And we've got this lovely downtrend that you can see following. By the way, just here shows you we're on the daily chart. Now, I've talked before about how you can use your own moving averages, and you can at will, and this is part of the art of trading, you can change the moving averages and the time frame of the chart to find your own way of identifying a trend. So obviously this is the daily chart, but you could use a weekly or an 8-hourly or a 4-hourly, whatever you like. And also, as you can see, I've used a 10 period simple moving average and a 30 period simple moving average, and the reason I've done that is because that is the moving average range that best represents this trend, because you can see that ever since this trend started, prices come back in and pulled it back into the moving averages, pulled back into the moving averages, pulled back in, and pulled back in. So obviously when it pulls back into a moving average, what we're ideally looking for is a small candle in the inside the moving average sell zone, which in this case obviously being a downtrend, it's a sell zone rather than a buy zone. So you're looking for a small bar inside the moving average sell zone. Here's one, and then you wait for a break below that bar or a break below that candle to get short and join the trend. So there was a perfect opportunity. This wasn't so good because we don't have a small bar, we have a large one, but had you waited for this candle, this red candle, to form and then taken the break below that candle, obviously your stop would have had to have been above there, but generally when you put a stop in, you put it above the high of the previous candle. So you enter the break of that candle on the low side with your stop above it. That would have been a perfectly good entry. Here's another one. Take the entry 1 pip below that red candle, you're short with your stop above the high. Again, you stay in. There haven't been any opportunities here that have not worked. This at the moment is fine. If you had taken the short of the 1 pip below that candle, you'd have got short here. You would now be slightly out of the money because the low of that candle is 91.18 and we're at 91.46, so you would currently be out of the money, but you wouldn't be stopped out because of course your high would be at the 1 pip above that candle. And the reason why you always want to put it 1 pip above the previous candle is that you want to make sure that you never get taken out if the downtrend continues. If it does break up, if it had broken up above that candle, we would no longer be in a downtrend because we would have had a higher low, sorry, a higher high, because I'll go through them. Here's the high, lower high, lower high, lower high, lower high, lower high. Here's the beginning low, or you could even say that one, lower low, 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 lower low. So we've got a nice series of lower highs and lower lows, and at no time has the price broken above the previous lower high, obviously because they're all lower lows. So the point of this video really is to say that this is one I did take, which is only a couple of hours ago. I took the break at the low of this candle here, and the low of that candle is, where is it, here on the bottom left, 91.89, and so I'm currently short from that level there. My stop is above the, in fact what I did is I put my stop, because this high here is 92.90 and this high here is 93.037, 93.04. It's only 14 pips, So I put my stop just above there to make sure that if the downtrend continues, I'm going to stay in the trade. And the other thing, of course, we're expecting, because as trend traders, our anticipation is that the lower highs and the lower lows will continue. Well, if I'm right that that is the next lower low, the lower high rather, our next port of call is breaking down below this lower low, which is 90. So I'm taking this trade with the expectation it will break down below 90. Obviously, my reward to risk is well more than 1 to 1. It's at least 2 to 1, and of course I don't have a take profit because I expect this to go and go and go. And I think I've mentioned in a previous video, when we got this lovely breakout on Aussie USD back in here, I did take a position and I played around with it. I got in and I got out, and actually I would have been far better to hold that initial position and just continue to hold it until the lower high and lower low sequence was broken. Had I done that, I would still be short. As it turned out, I've been in and out and in and out, and I have made money, but not as much as if I just sat tight. So this one, I'm going to sit tight until I get stopped out, or, well, let's hope that I get stopped out when it's come right down here and put in another 5 or 10 lower highs and lower lows. Don't forget, we've already come from, since this sequence started, 102.50 down to 91. It's 13 big figures. Why can't we have another 13 and come down and test under 80? Who knows? You can watch and see how well I do on the trade. Happy trading. Hope that's useful. The point of this trade is that you can find these trades anytime you like. You don't need me to tell you about them. You can decide your own time frames and your own moving average pairs. Find out where the moving average sell zone in a downtrend is. Find out where the moving average buy zone in an uptrend. Take a very low risk trade. This is relatively high risk. No, it's not a high risk trade. It's really because I'm basing it on the daily chart. My stop is something like 130 points, whereas obviously if you took this on a 4-hour chart, which I talk about, I'm going to be talking about shortly in my Nikkei trade. If you take it on a 4-hour chart, then your stop generally can be a lot tighter, and 8-hour as well. So daily and weekly charts, obviously your stop has to be that much wider. Happy trading. Hope that was helpful.